Good morning, everyone. You are watching a live daily market outlook from Windsor Brokers for Thursday, 2nd of May 2013. Another busy day ahead of us following yesterday's roller coaster movements when euro and sterling broke above some important barriers, but finally failed to sustain gains and pulled back, though still holding in the positive territory, as yesterday's top release was the Federal Reserve's rate decision. The outcome is that Fed holds steady on stimulus, but worries about fiscal drag are still present. The U.S. Federal Reserve said it will continue buying 85 billion in bonds each month to keep interest rates low and spur growth, and added it would step up purchases if needed to protect the economy. Basically, no significant changes in their rhetorics as they expressed concerns about drag from Washington's belt tightening. The Fed described the economy as expanding moderately in a statement that largely mirrored its last policy announcement in March. As said, no significant changes came today, broadly as expected, with Fed officials citing continued improvement in labor market conditions and did not change their description of inflation, saying it should remain at or below the central bank's 2% target. Yesterday's quite disappointing ADP data, initial signal for the Friday's non-farm payrolls, pushed the dollar significantly lower, but the greenback managed to regain some ground following Fed's announcement, with today's releases being again the key one of the European Central Bank that is widely expected to cut the rate by quarter percent for the first time in the 10 months, driven to act by an economy wallowing in recession and feed to do so by sharply falling inflation. Economic data over the past few weeks, since ECB President Mario Draghi said the bank stood ready to act if necessary, has shown growth prospects darkening as unemployment hit a record high. In April, inflation had its biggest monthly drop for more than 4 years to 1.2%, and well below the bank's target of 2% or slightly below. The comments from ECB officials, particularly the Vice President Constancio, last week said that there was still room to cut interest rates, reiterating the bank's readiness to act should the economy deteriorate further, which he said had been unfortunately in case. The polls of economists taken recently, basically before the inflation data, saw a slim majority forecasting a 25 basis point cut from the current 0.75, while only half of the 22 Euromoney market dealers polled such a step. The economic impact is questionable, and not everybody is in favor of another cut. German Chancellor Angela Merkel said last week the ECB would have to raise interest rates if it were looking at Germany alone. So there is still a disagreement within the members of the European Union, as Germany as the #1 country and the paymaster sees the opposite action more workable at this point. Not to comment more, let's just take a quick look at today's calendar before we move to the technicals, as most of you are waiting to see what are the expectations for today. As said, quite a full calendar for today. Releases already seen. Building approvals from New Zealand came in disappointing, -5.5 compared to 3% in February and 1.3% forecast. Chinese final manufacturing PMI for April came at 50.4. This percentage sign is wrong, slightly below the previous release and the forecast that were 50.5 and 50.6 respectively. Spanish manufacturing PMI is already out. Unfortunately, we still don't have the release. I will tell you in a minute what's the release, and we're going to fill it in the calendar. While actually it's not out yet. In a minute, I do apologize. PMI from Switzerland due at 7:30 shows improvement, though still way below the threshold of 50.00. 49.2 is the forecast compared to March's 48.3. Italian PMI for April 44.9, forecast 44.5 previous release, and the Eurozone one that due at 8.00 is showing no changes for today. 46.5 is the forecast, identical to the previous release. UK's construction PMI for April is due at 8:30. 48.1 is the today's consensus compared to 47.2%. Another release comes from United States at 11:30. Challenger job cuts. 30% was the previous release. We don't have the forecast, and then the key release comes at 11:45 GMT. US European Central Bank rate decision. As said, widely expected is the 0.25% cut, with the comments due at 12:30 press conference of President Mario Draghi, where he will give us some more clues about the next steps of the European Central Bank. Canadian trade balance comes at the same time for March at 12:30 GMT, minus 7 billion, minus gap of 700 million Canadian dollars is seen forecasted for today compared to the February's gap of 1 billion Canadian dollars, slight improvement seen. US weekly jobless claims due at the same time, showing slight increase in the people filling for jobs. 300 for jobless, 345,000 is the forecast compared to 339,000 in the previous week. Trade balance for March shows slightly narrowing the US trading gap. 42.1 billion gap is seen forecasted for today compared to the gap of 43 billion in the month of February. And preliminary non-farm productivity for the first quarter, 1.8% is the forecast compared to minus 1.9% in the fourth quarter of 2012, while unit labor costs in the first quarter is expected to grow by 0.2% compared to 4.6% in the fourth quarter of 2012. And these are the highlights from today's economic indicators. As said, quite a busy calendar for today, with the focus, of course, on European Central Bank's rate decision, with the widely expectations of, with the broader expectations of 0.25% rate cut seen today, with the press conference due at 12:30. We'll have some more clues and more information about the next steps of the European Central Bank. Also, as said, Mr. Mario Draghi's comments from before, that he said the bank and European Union will do everything possible to improve the current situation and to keep all the countries within the Union. So let's see what are going to be their next steps. From technicals, quick look now at starting with the single currency. Yesterday's rally and advance through the key near-term resistance at 132.00 resulted in a spike higher to 132.41. That was the highest seen so far, but the pair did not manage to hold gains for a long time. A quick pullback lower, and the daily close below 132.00 has resulted in further easing during the Asian and the beginning of European session, when the pair posted fresh low at 131.46. Now, from the Fibonacci levels, we have initial support at 131.30. That marks 38.2% retracement of the rally from 129.50 to 132.41. This is also equivalent to the previous high of 19th of April. And the support is reinforced by 4 hours 20 days exponential moving average. So basically we are having a quite good support at this zone, ahead of previous peaks at 131.15, and then another significant level 130.00, pardon, 131.00. It's approximately 50% retracement, and just close to it is the ascending 55 days moving average. Ideally, dips should be contained somewhere around 131.15.30 in order to keep the bullish structure in play. Of course, more pressure is seen from today's possible rate cut, as this is seen seen giving a negative impact to the single currency. With the technicals so far holding a positive tone, as shown on the 4-hour chart, despite the pullback, that could be still seen as a technical pullback, as the RSI is now out of the overbought territory on the 4-hour chart, and the MACD is starting to point lower, but overall the indicators are still holding in the positive territory, and seeing room for possible fresh extension higher. Any penetration, any violation of the support at 131.00 would be quite negative for the single currency, as this will complete the current rally and bring more focus towards the downside. Again, we are having small technical problem now. It's been solved. Back to the hourly, the indicators now moved into the negative territory following the pullback and the break below 55 days hourly moving average that currently stands at approximately 131.50. As set, 131.30-15 zone is seen as a good support for the single currency. From the technical point of view, any penetration lower would delay immediate bulls and would be signal for a deeper reversal. Otherwise, we'll be looking for a fresh extension higher, as basically a break above 132.00 previous peak signals fresh phase higher as a part of the larger recovery rally from 127.44.50 double bottom posted at end of March, beginning of April, with the higher low being established at 129.50. Seeing potential for a further extension higher, especially that the pairs yesterday's action cracked 50% retracement of the larger 137.10 to 127.44 descent that stands at 132.27, though the gains were short-lived, but still we have more potential towards the upside, as for now 90 days moving average so far holds the downside, and the overall picture is underpinned by ascending 200 days moving average that currently stands at 129.57, and basically it contained the previous corrective action of 132.00 that was that found ground at 129.50. From the Ichimoku studies, the daily cloud top at 132.68 so far limits gains and offers good resistance. We need to see break above this level to confirm the bullish resumption. First we have the high of yesterday at 132.41, then currently is pardon at 132.30 the cloud top, with the Tenkan Sen line at approximately 131.00 offering support along with the Fibonacci levels 50%, and as acting also as psychological support. With the cable, yesterday's rally extension above 155 psychological barrier that also marks daily Ichimoku cloud. The top has extended gains to 156.03, just ticks away from our initial target at 156.05, 50% retracement of the larger 163.80 to 148.30 descent, with the daily structure holding a positive tone and seeing a potential for further extension higher after initial barrier at 154.10 has been cleared, and also the price surged above daily Ichimoku cloud top that is approximately at 155.00, keeping the overall picture positive for further resumption. Current pullback, better seen on the hourly chart, is still seen as rather consolidative than corrective, as initial support at 155.25 previous higher platform, reinforced by 55 days exponential moving average, keeping the downside so far protected. Should price break lower, we'll be watching for 155 previously mentioned round figure, and the Ichimoku cloud top as the next support, while key support, while another one A good one stands at 154.66. This is 30th of April low, with the key support standing at 154.10. This is previous peak of 12th of April, as well as a low of 26th of April, seen as a breakpoint. Any penetration lower, this is also close to 50% retracement of the upleg from 151.95 to 156.03. Any penetration below these levels would delay bears and bring more focus towards the downside. Otherwise, ideal reversal level is seen somewhere above 155 in order to resume larger bullish action, and the break above 156.05 will be looking for a test of 156 156.88, 13th of February 2013 high, and then we have 157.00 as around the figure resistance. Hourly structure is now losing traction as indicators are breaking into the negative territory, while the positive tone still persists on the 4-hour chart, and the corrective consolidative action is seen preceding fresh rally due to the overbought conditions. As we can see, the hourly, the 4-hour RSI is now out of the overbought territory, and MACD is pointing lower. Overall picture, as said, is still positive, and as long as we hold above 154.66, 155 as good supports, the upside should stay favored for now. Dollar yen so far holds. 1 second. Better shown on the hourly chart. It holds at 97.00. This is quite significant, and the good support has several attempts since 30th of April failed to break, though the near-term structure is still negatively aligned. As we can see, the price holds below the moving averages, and the indicators are still in the negative territory on the hourly chart, with overall descent being maintained by descending 55 days moving average, currently at 97.47, but near-term support has been found here. There is no signals yet of basing attempt, as the price holds close to this level based to the on the hourly indicators, with the 4-hour indicators showing situation still downside still vulnerable, despite having now good base at 97.00. The pressure is still seen towards the downside as indicators hold in the negative territory, and above this we have the bearish crossover of 20 over 55 days moving averages that keeps the pressure, the downside pressure, penetration through 97 as first, and the good support will look for the next one that is also seen as the breakpoint, 96.75, 96.70, 76.4% Fibonacci retracement of the upleg from 95.80 to 99.87, along with the previous peak of 12th of March at 96.70, and a break below this level would be confirmation that the upside remains protected for now, and the triple top is being formed for further extension lower. Of course, confirmation will require a break below spike low of 16th of April at 95.80 to confirm the upside rejection and open way for a more significant pullback. At this moment, initial resistances stand at 97.40.50. Then this is also reinforced by descending 55 days moving average. Then we have 97.66 with the 98.00 being near 38.2% Fibonacci retracement of the downleg from 99.49 to 97.00. Any more significant improvement, however, requires regain of 98 to 98.25, where we have the previous peaks of 29th and 30th of April, as well as 50% retracement of the entire downleg. That will sideline immediate bears and avert immediate downside risk. Otherwise, as said, more risk is still seen towards the downside, penetration through 97 to open a breakpoint at 96.70 in the near-term price action. The top loser of the day yesterday and continuing today is the Aussie dollar as it lost ground again following past few days strong recovery rally of 102.20 that peaked at 103.83 2 days ago, short of initial resistance at 104.00. This is 90 days moving average, and it's also the 50% retracement of the down leg from 105.81 to 102.20, with the initial corrective rally being fully retraced on this morning's extension down to 102.22 so far. Again, more risk is seen towards the downside as a loss of 102.20 will open immediate target psychological support at 102.00, and see for a further extension lower, where we'll be looking for a test of we have the Fibonacci expansion 50% of the way from 103.83 yesterday at approximately 102, exactly at 102. This will be the first target. Then the next one is 101.56, 61.8% Fibonacci expansion of the down leg from 103.83, and then we have the range, larger range low at 101.14, low of 4th of March 2013, and finally 101.03 close. 101.03 is the 76.4 Fibonacci expansion. Break below the 101.14, that is very significant support as shown on the weekly chart. We have the range that was established sometime in July 2012, and so far the price was moving between approximately 101 and 106.20, unable to break either side, with the current reversal putting more focus towards the downside levels, downside supports and the floor of the recent range. A break, a set of very important 102.20 support will directly open 101.14, where we also have the 50% Fibonacci retracement of the larger and the longer term rally from 195.79 May 2012 low to 106.23 September 2012 peak. Break below the range will be quite significant, as this will be looking for a further retracement of 95.79, 106.23 rally. Back to the lower time frames, negative tone dominates on the lower time frames, with the hourly indicators being extremely extended at this point and oversold, yet we have no clear signal of reversal. Similar with the 4-hour chart, studies where indicators broke into the negative territory and seeing room for a further extension lower below the recent low at 102.20 and the psychological 102.00 support. From Ichimoku studies, negative tone persists as the price is well below the cloud, and the Ichimoku Tenkan-sen line is currently standing at 103.01. What we have commodities now, let's take a look at the crude oil that is in the pullback and standing at the back foot following a reversal of recent peak at 94.66 posted a couple of days ago, with pullback retracing over 50% of initial rally from 85.90 to 94.66 on a dip to 90.10. So far 90.28 was the 50% retracement. Consolidation is seen above this support, though the negative tone persisting on the 4-hour chart sees more potential towards the downside, and any bounce higher facing a good resistance at 91.10 that is currently tested, and dynamic resistance 91.74 55 days moving average, and 92.10 20 days one that is descending now and looking for the bearish crossover. This is also equivalent to the low of 26th of April. Ideally, dips bounces should be contained, should be capped at 92 zone in order to resume the current pullback. From the other side, on the larger picture, negative tone is also seen on the daily chart as the price lost again its 200 days moving average at 92. This is what I mentioned, what I meant when I said the 92.00. It's quite a strong resistance, and the bounces should be ideally capped somewhere around these levels in order to resume the pullback reversal from 94.66 peak and open way down towards next good supports at 89 zone. From a quick look at Ichimoku studies on the daily chart, negative tone persists as the price well below its cloud, and now it's testing the Tenkan Sen line that's currently at 91.17. That may be signal for, in case of a break higher, maybe signal for some more significant corrective action, but overall picture remains still negative. While the 4-hour Ichimoku studies show the price currently in the cloud with the cross of Tenkan Sen below the Kijun Sen line, putting an additional pressure, and we have at 89.90 the cloud base as the next good support. And finally, the gold that was quite active yesterday. We had from Ichimoku studies. Let's start with this negative, very negative is the daily one, while different situation is the 4-hour Ichimoku studies, where the cloud top at approximately 1450 now keeps the downside supported, though the price is still unable to break above the Tenkan Sen line, currently at 1460. That is equivalent to the previous range floor. Keeping the picture mixed at this point. On the larger picture, negative tone is still persisting despite the current rally from 1321 low of 16th of April. That was capped at 1485, just ahead of 61.8% retracement of the down leg from 1590 to 1321, and then subsequent pullback. It's better shown on the lower time frames. I think on the hourly is the best. We had a break of the triangle consolidation narrowing range yesterday, and a dip below the previous correction low at 1448. That resulted in a break down to 1440. It's just ahead of the previous high at 1438. That was acting as a good support. Now fresh bounce higher seen yesterday, and that basically recovered a big part of yesterday's losses on the rally to 1463. That basically regained the previous range floor. Sees again some potential towards the upside. The indicators on the hourly chart are in negative territory, but still pointing higher. And we have now the bullish flag consolidation of the recent rally. That is seen as a bullish signal, of course, in case of completion and break higher. We need to see the break above 1463 and then regain of levels around the 1470 zone to confirm the bulls back in play for possible test again of the recent peaks 1477, 1479 ahead of key barriers at 1482 and 1485. The downside is still vulnerable. As said, there's quite a negative tone is still seen on the hourly chart with the 4-hour indicators now losing traction and attempting below their midlines, and the price hovering around the 55 days moving average. The main risk will be seen on the slide below yesterday's low at 1440. That would signal further weakness as a part of pullback from 1485, 26th of April fresh high, and basically the break below 1440, 1438 will signal an end of this corrective action from 1321 to 1485, and will sideline immediate bulls in favor of some stronger corrective action, as basically, as we said, the price is holding a negative tone with the latest acceleration seen 2 weeks ago, breaking below a very important 1520 multi-year range floor and critical support, as well as 1500 as psychological support, seeing a pullback down to 1321 so far, with the main risk seen on a change of the direction of the yellow metal that was in steady uptrend for over 10 years and peaked in 2011 at $1,920 per ounce. Now we have quite strong signals of possible major reversal and trend change. That will require a break below first previous high low at 1321. Then we have the 38.2% retracement of the larger rally from 270 to 1,920. That stands at 1,290. A break below this level will give us more negative signals as monthly indicators are in the steep descent, and see now more potential towards the downside as long as 1500, 1520 holds the upside limited. Questions and answers, please. I think I have finished my part for today. Now it's your turn if you have any questions to raise. Sound not coming. Again, we have this technical problem. I hope from my side everything looks correct and running. I took all the measurements not to lose the sound like a few days ago. 1 and 5 minute chart. This is too a small time frame to show a bigger picture because I'm doing a forecast for the day or two. So on 5 minutes I cannot. This is mainly for traders for in and out trading. It will not give us a more clear picture. Usually we are with a minimum 30 minutes and then hourly and 4 hours in order to have a bigger picture and a more clear direction. How many attendees? So we have quite a big number of attendees, especially today. Silver, Dow Jones, Euro, Yen. Let's do it one by one. A quick look at silver, first of all. A negative tone that persists. Let's just move the lines. Wow. Okay, negative tone is still dominating on the larger time frame as shown on the daily chart, despite the corrective rally from 2396 low of 16th of April that peaked at 2483, still being limited by 20 days descending Bollinger Band. And fresh weakness now below 24 sees again more risk towards the downside. On the lower time frames, 4-hour indicators are just breaking below the midlines with bearish crossover at 2400, seeing limiting the upside and putting more pressure towards the downside. Of course, the current picture shows rather a range than any clear direction, with the downside being protected at initial 2260, and more significant is the low at 2200, while the upside stays capped at levels just under 2500. Break of either side is to define whether the silver price is going to correct higher of the recent steep descent, or break lower to signal resumption of the larger downtrend, where we'll be looking for extension lower, extension lower down towards below 22. We have 2134 previous high of 1st of March 2008, 2000 as psychological support, and the 1944 December 2009 high. These will be levels to watch in case of downside break. Otherwise, on the upside, clearance of initial resistance at 2483. We'll be looking for a further recovery of the down leg from 2807. This is the high of 9th of April 2013 down to 2200, with the 25 as said, 25 being quite significant resistance. This also marks 50% retracement. In the near term, more focus is still seen towards the downside according to the 1 and 4 hour chart situation, with the break above 24 seen as initial resistance. 2392 is the high of yesterday. to show more upside potential. Otherwise, immediate risk will be seen down towards the 23.40 and the 23.24 low of yesterday's trading. The next was Euro Yen and Dow Jones. Let's take a quick look. Now, I do apologize if my charts are not set. Okay, we have quite good settings. Hourly structure of Euro Yen is turning negative again following yesterday's upside rejection at 128.91, just above 61.8% retracement of the down leg from 129.87 to 127.03, with 127 seen as a good base for now. The further sideways movements, I would say, as shown on the larger picture, is seen likely, though the structure is still negatively aligned, as shown by the 4-hour indicators, as well as price holding below both 20 and 55 days moving averages, keeping the immediate risk on the downside 127.20 and 127.00 seen as the first supports, break of which to open way for further easing and the retracement of the rally from 119.09, this is the low of 3rd of April, to 131.11 peak of 11th of April, where we'll have 126.50, 38.2% retracement, as well as a low of 17th of April seen in the immediate focus. Conversely, break above 129 recent peaks would allow further stretch higher, and a possible attempt towards the recent range tops that are around 130, 130.65 levels. Key barriers are 130.65 and 131.11. We can see it better on the daily chart. Basically, the pair is now consolidating within the triangular shape, and the break of either side would define the recent the next direction, though more focus is still seen towards the downside as the price holds just above the triangle support. Should the price break lower, we'll face the 127 as our key near-term support, break of which to introduce the next significant level, the 124.95 low of 16th of April 2013. And finally, the Dow Jones. Let's just take a look at the daily. Strong uptrend remains in play, though we are seeing the consolidation under the recent record highs at 14.822 and 14.785. But overall picture remains positive, though the bearish divergence is seen on the daily RSI and MACD, and this could be quite risky for a deeper pullback, though so far the indicators are holding positive tone. Now, congestion is seen on the 4-hour chart under a recent peak at 14, the highest one 14.822 and 14.778, with a still positive tone existing on the 4-hour chart, as the recent pullback from the peak of 792, pardon, so far found support at 14.640. Near this is the 38.2% retracement. 14.626 was the lowest, and the current bounce is seen as corrective. The overall tone of recent low at 14.393 remains positive, though the price now is attempting above 55 days moving average, and then we have the dynamic one, the 14.700 to 20 days moving average, along with the previous peaks at 14.710. Basically, break above 14.700 is to reintroduce upper targets at 14.790 levels. Conversely, break below the recent low at 14.626 and more significant 50% retracement, and the higher base at approximately 14.600 would risk further easing. Main resistance is again on the upside 14.822, and the range floor that is currently at approximately 14.400. The break of either side is to define the fresh direction. Wow, we didn't put the chart. I do apologize. We're going to take a quick look again with the charts. This is my fault. As said, Dow Jones is being entrenched within the consolidative range down on the 14,400 approximately, on the upside 14,800 with the price slightly being still aligned, the structure slightly being aligned towards the upside, with the pullback seen yesterday being contained at 14,626, around 38.2% retracement of the rally from 14,393 to 14,778, with fresh attempt higher seen underway. Overall, positive tone still persists, with the current movements seen as a consolidation of the larger uptrend and being limited on the downside by approximately 14,400 as the price is now closer to the upper levels. Further extension higher, according to technicals, is still likely unless we lose the 14,400. That will be a signal for a stronger pullback, as shown on the daily, the monthly chart part. I do apologize. On the weekly chart, we still have a strong uptrend that is unobstructed, with consolidation seen preceding a fresh rally. Now, quick look at the euro yen that we missed. We missed all of this analysis because of my mistake with the chart. Daily structure positive, though the current triangular consolidation sees now downside the risk on a break below the triangle support that is currently at 127.70, loss of which to open immediate support at 127 zone that acts as a near-term base, and further extension lower to risk the key support at 124.95, low of 16th of April. Lower time frames situation. I do apologize for this. Shows the price within the range and the sideways movements. Again, the limits are 124.95 downside and 131.11 at the upside. Slightly negatively aligned for our structure sees again more risk towards the downside and the test of 127 base, loss of which is to open way for further weakness. 126.52 seen as the next 38.2% retracement and the low of 17th of April. On the upside, the lift above 129 as the recent peaks is to introduce the upper targets 129.90 and 130.65 ahead of a key barrier at 131.11. As said, for our structure is still slightly more negative, while also negative tone dominates on the hourly chart as the price is descending lower and being limited, being maintained, the descent being maintained by the all moving averages are that prices below them, and indicators in the negative territory, again seeing more pressure towards the downside. Of course, today's release of European Central Bank rate decision will give us more clues about further movements. Regarding this automatic trading, I'm not practicing this, so I cannot say anything for or against this. I think you should contact our customer service department that is more involved in these things. I'm more conservative in analyzing markets, and unfortunately I don't use it, so I just cannot give you any recommendation. They will work, of course, but mistakes cannot be ruled out, so I prefer to say if I make mistake, that is my mistake rather than machines. Again, you should contact our customer service department. They are working on some projects with these things, and I think you should get more information from them. It seems that we have no questions for today. I would like to thank you all for visiting us on today's session. We're back again tomorrow morning. Again, busy days ahead of us today and tomorrow. Friday we have the release of U.S. non-farm payrolls data that will give another boost or push to the market. In any case, we'll keep the markets busy at the end of the week. So stay with us, and we expect to see you tomorrow morning at our regular time. Until then, keep an eye on the releases due today, especially on the European Central Bank monetary policy and rate decision, and wish you a lot of success in your trading. Good luck.